Gold keeps hitting new highs, and most people are asking the wrong question. It's not, is it too late to buy? It's, why are the people at Davos talking about AI while quietly hoarding gold in the background? Today on the comment section with Thomas Paul, we're breaking down what this gold spike really means, what I'm watching next, and what an actual sane plan looks like if you're not a billionaire with a private jet and a bunker in New Zealand. Here's where things get interesting. Let's start with the gut feeling a lot of you have right now. Gold's ripping higher. Your feed is full of charts and urgent videos, and you're thinking, if I buy now, am I the sucker at the top? I get that. When I was about 12, my parents trusted a bank advisor who said, "Don't worry, you're safe." A few months later, most of their savings were gone. No drama, no movie scene, just a very quiet dinner table for a long time. That's when I learned. Experts can be wrong, and timing matters. So, what's actually driving gold right now? First, the obvious. Inflation didn't magically disappear just because the headlines moved on. Prices are still higher. People feel it at the grocery store, not in some CPI press release. Second, interest rates. The whole market has been playing this game of when will the Fed cut? Every time there's a hint of lower rates, gold smiles. Because lower real yields usually mean your cash and bonds look worse and gold looks better. But it's even getting worse. Here's the part not getting enough headlines. Global uncertainty. You've got tensions in multiple regions, elections all over the place, debt levels that look like a teenager's first credit card bill, and central banks quietly buying gold like it's on Black Friday sale. They're not buying meme coins. They're buying metal. And if you zoom out, gold isn't just reacting to today's news. It's reacting to a decade of money printing, stimulus, and a world that kind of assumes we'll just print more if something breaks. Now add the AI twist. At places like Davos, the public conversation is all about AI optimism. AI will boost productivity. AI will grow GDP. AI will fix everything except your Wi-Fi. But behind closed doors, the same crowd is hedging, because they know AI can also destroy certain jobs, shake up entire industries, supercharge disinformation in elections, and create wild market swings when traders plug AI into every strategy. So, on the surface, AI hype. In the background, gold insurance. And here's where things take a step further. Let's hit the question everyone actually cares about. Is it too late to buy gold? Short answer. It depends what game you think you're playing. If you think gold is a lottery ticket that will double in 6 months and make you rich, then yes, it's too late. It was always too late for that. Gold is not a tech stock. It doesn't launch products. It doesn't beat earnings. It just exists. That's the point. But if you see gold as insurance, as a hedge against currency shenanigans, central bank experiments, or some big geopolitical mistake, then the real question is, do I have any? Not, can I perfectly time the top? When I was in my early 30s, I put money into a boring, unfashionable investment while everyone around me chased hype. It didn't explode. It just worked. Slowly. That's how I think about gold. Boring by design. But then the unbelievable thing happened. Retail investors started trying to trade gold like a meme stock. Options. Leverage. Bro, I'm going all in on this mining ETF. No. If you're trying to front-run every tick in gold, you're sitting at a poker table with hedge funds, HFT algorithms, and central bank chatter you will never hear before they act. This is why framing matters. Back in college, I worked at a small newspaper. I watched one economic story get spun into 3 completely different headlines. Market surges on optimism. Fears grow over market bubble. Investors cautious amid uncertainty. Same data, different story. That's what you're seeing now with gold. Some say gold to the moon. Others say bubble. The truth is usually somewhere in the middle. Fear, hedging, and long-term anxiety about money and power. So, what should you actually do now? Here's where things get interesting. First, zoom out. Look at your whole portfolio. Ask, do I have any exposure to real assets at all? Not just gold, things that hold value when trust in paper gets shaky. Am I overexposed to one story? All AI stocks? All tech? All one country? All one asset? If everything I own depends on AI plus low rates plus no crisis ever, that's not a plan. That's a wish. Second, size matters more than timing. For most normal people, we're not talking 50% of your net worth in gold bars under the mattress. We're talking a small, reasonable slice, something that, if it goes nowhere, you don't panic. But if things get weird, you're glad it's there. Third, understand the vehicle. Physical gold has storage and hassle. ETFs are easier but come with different risks. Mining stocks are not gold. They're businesses with debt, management, and drama. If a product sounds too clever and uses words like triple leveraged or inverse, remember, those tools are built for traders, not for someone trying to sleep at night and go to work in the morning. But it's even getting worse, layer AI on top of this. AI-driven trading can move markets faster than humans can react. AI-generated news can move sentiment before anyone has time to fact-check. And politicians will absolutely use AI narratives in this election cycle. Either AI will save us or AI will destroy us. Sometimes both in the same week. That means more volatility, more sharp moves, more, wait, what just happened? Days in your portfolio. Gold, for all its flaws, doesn't care about your feed. It doesn't tweet. It doesn't go viral. It just sits there while humans lose their minds. And here's where things take a step further. If you're watching this and thinking, I want to talk about this stuff on YouTube, but I'm not trying to be on camera 24/7, there's actually a smart way to do that. This video was created with Fludge.io, the same system that powers this entire channel. If you've ever thought, I'd love a channel on AI, markets, or politics, but I don't have time for research, scripting, recording, editing, thumbnails, and all that, that's literally what this tool solves. It finds trending topics in your niche, does the deep research, writes a structured script, builds the video with an AI avatar, and gets it ready to post. You stay in control. You can step in anywhere, pick topics, tweak scripts, record your own voice if you want, then let the system handle the rest. So if you want to build an actual serious channel without burning yourself out, check out Fludge.io after this. But then he said this unbelievable thing, back to gold and what to watch next. 3 big things are on my radar. 1. Central bank moves. If they keep buying gold at record levels, that's a long-term vote of no confidence in the current system, no matter what speech they give on stage. 2. Rate cuts and inflation surprises. If inflation flares back up or rate cuts are deeper and faster than expected, gold gets more fuel. If real yields stay high, gold has a headwind. 3. AI and political shocks. An AI-fueled misinformation storm during an election, a big cyber event, or a sudden policy response to AI that hits tech stocks hard. Any of that can push people towards safe havens. My checklist is simple. Don't chase parabolic spikes. Decide my allocation before the panic. Stick to boring, understandable ways to get exposure. And remember that gold is a hedge, not a personality. Quick disclaimer, none of this is financial advice. I'm not your advisor. I'm just a guy who hates buzzwords like strategic realignment because I've been laid off by one of those before. Do your own research, talk to a professional, and don't risk money you can't afford to lose. All right, I want to hear from you. Are you buying gold here, waiting for a pullback, or skipping it entirely and betting on AI eating the world? Drop your take in the comments. If you found this breakdown helpful, hit like so more people actually see it instead of the get rich quick with gold nonsense, and subscribe to the comment section with Thomas Paul for more calm, data-first coverage of AI markets and the political circus around them. I'll see you in the next one.